Hey, good morning, everybody. Today is Monday, March 11, 7:22 a.m. Eastern Time. So let's just review what we had in the book last Friday and compare with the pre-market. By the way, I need to open my spreadsheet because I forget to do that. But anyway, let's start with the market structure. So at the close on Friday, the volatility skew printers, a bullish smirk, right? So a bullish smirk means sell out of the money puts to buy out of the money calls. Basically, as I have been explained to you guys several times, right? Several times. If you compare what we have right now, let me put in the screen. Hold on, it's a little bit slow because when I open, the spreadsheet, my computer just start to be really slow. So anyway, let's compare what we have before on Friday and what we have right now. Look how different is right now. Okay, so from a bullish to a bearish, but it's normal because the future is suggestions like a 8 points gap down, right? 8 point gap down. Also match what we seeing right now in the future. Also match. Let's go back to the market structure with such order, right? Also match with such order that I give you guys two scenarios because the goal of the options flow is try to understand who is behind, of the structure. So in this spread, of course, this spread is supposed to be have more legs, but Thinkorswim just get the spreads. So this spread was a put spread, a vertical, where looks like dealers bought 5,125 put and sold 5,100 put, right? Basically, 25 points spread. So if it was a credit spread, his investment was 1.2 million, and the break even is 5,118.50, right? So if you close it, if you market back test 5,110, he will made 30%. His 1.2 millions will become 1.5 millions. 30% in a day. It's a lot of money. It's a lot of money, right? Anyway, if you was a credit spread, and basically this guy is leverage using the amount of money that he has, he's looking for 1.2 millions full premium, right? He's looking for a market close above 5,125. But the risk reward doesn't look to me a lot of attractive. Why? Because if you market close below 5,100, he will lose $4.7 million, 25 US dollars per contract. Okay, so looks like for me that was a debt spread. He paid for that, and he was looking for 4,110. Why 500 Remember what I show you guys in the book? If dealers are looking this week to collect premium, okay, especially today, the region that we have lower open interest is 4,110. We have lower call contracts open and we have lower put contracts is open. So 5,110 tend to be the maximum pain. So make totally sense this to be a debit instead of a credit spread. He bought the vertical, he didn't sell the vertical. Also, the risk return doesn't look too much attractive if he sold such vertical. It's 25 US dollars per contract. Okay? So, the future suggests now a 9-point gap down. Since we close at 5,123, so future, is telling that we supposed to be open nearby 5,110, right? So this guy will receive 30% profit. Okay, he will receive 30% profit if he close at the open. Okay. Anyway, so consequently, now we have, instead of a bullish volatility smear, vol skew, now we have a bearish. So first thing that we just review it. Okay, now we have a bearish. Where 5,125 will be the inflection point for the upside and 4,120 is the inflection point for the downside. See, since the future is suggesting us a gap down, we need to look for 4,120 as a resistance. Okay. Anyway, so we already reviewed the order that we left on Friday and the volatility skew. Let's look for the delta flow and the gamma design. The delta flow is also suggests the same thing as the volatility skew, right? 20, 25. 20 support, 25 resistance. Since we are open with a gap down, is a little bit different. Now the structure compare what we had on Friday. Okay. Now looks like that 4,120 will be the resistance. Okay, so let me open the spreadsheet to check it out, the delta flow. So the delta flow is still bearish. Okay, it's really slightly different. It's really different comparing with what we have on Friday, right? Now we start to see bearish delta flow between 5,100 5,105. Okay, sorry. Before we had like full negative delta flow. So far now we have positive delta flow above 4,110. 4,110, that was the region that we were looking for as a maximum pain on Friday. So per current design, looks like that we tend to back test for 5,100 and 5,105, right? And of course, the order that such player built, suggests us that we will not break 4,125, right? As I explained in the beginning of this video. So the delta flow is really, really different than what we had before. So looks like that we will backtest 5,095 now. Before we were looking for 4,110, and also the gamma design. The gamma design suggests Friday, that we supposed to be hold at 4,110 because this is where we start to see a negative gamma. But the worst case scenario left on Friday was 55,009 because that where they add positive gamma, a defense. Per current delta now looks like that the region between 5,009 and 5,095 will be viable. But remember, we are in a negative intraday, we tend to open a negative gamma territory. Negative gamma territory means sell weakness and buy rallies. So if you will see a sell-off in the region 5,009, 5,095, right? We tend to see a reversal. I mean, Friday tended to be the top. Friday tended to be the top. I don't disregard that. But you guys know that I'm still looking for a possibility to see a squeeze and see market back test 5,200, 5,215. Doesn't mean that I'm right. Because the first goal, the magneto, was 5,150, right? And dealers, squeeze people up to 5,109. I also highlighted that every single retailer is supposed to be short SPX as 5,150. So maybe, they bring you up to 5,109 to clean it up, all the short sales at 4,150. Okay? But if you see a recovery over here at 5,009, 5,095, especially today, I still believe that dealers could bring markets around my target at 5,200, 5,215. Okay? If you see buyers jumping in at 5,009, 5,095, that's what suggests on Friday. And now per delta, okay, I'm still looking for a possibility of a squeeze up to the target that I have been telling you guys. Okay, I know a lot of people just criticize me. You said that go over there. And yes, I said. And you guys realize that at least we went really close from there. Because we backtest 5,109 was exactly 25 points from my target. Very, very close. Of course, market doesn't need to go over the market, dealers, the robots that they use, the machines that the dealers use, they know how to calculate premium better than I, right? Anyway, just highlighting. If you see a buyer jumping at 5,009, 5,095, I don't disregard a squeeze up to 5,200, 5,215. Maximum 5,250. Okay? So far, delta levels, suggesting us a viable region at 5,009, 5,095. Exactly what they left on Friday according to the gamma structure. Okay? And remember, if you see buyers over there and markets closing around 5,110, this guy will be paid in full 30%, and dealers will collect full premium. Means house wins again. House wins again. Okay? So we already reviewed basically the volatility skill, the gamma design, and the delta flow, and the levels now is like the same as Friday. The only difference that we saw 5,125 as a resistance. Now, per volatility skill and according the future, the rejection area supposed to be 5,120, right? 5,120. Maybe 5,110. 5,110 was the region that we were looking for as a maximum pen on Friday. Maybe 5,110 will reject further by pressure instead of 20 and 25. On Friday, we were looking for 25, right? So pay attention in 5,000, 5,009, 5,095. Buy is supposed to be there. Then a jump up to 5,110. Now, per what we have in the volatility skew curve, plus delta, plus gamma, plus maximum pain, 5,110 tend to reject further by pressure. Okay? So those are the levels that we have. Let's review some things, especially Bitcoin. You guys know that, I close all my cryptos because I really don't like the environment. But I never told you guys that we don't have more upside, right? I never said that. I also provide you guys two Fibonacci projections to Bitcoin. One bring Bitcoin around 71,000, and the second one I was looking for 73,000, right? Just to review the closest group. If you guys, have been following and remember my targets about the Bitcoin, especially the break of the major resistance that was 67,654, the first target of the Bitcoin per graph is 86,674. And my maximum target, I also highlight as the big short, is 110,000. That was, the region that I'm looking for as, all-time highs for Bitcoin, right? But I also highlighted you guys that the amount of leverage, Bitcoin we tend to see a pullback in all the risk assets, starting soon. And I was looking for Bitcoin at least to back test 48K, right? Remember, the cup and handle that I draw to you guys? Yes, I'm still looking for Bitcoin back test, a pivot, a intraday pivot over here that is in the region at 48 and 50. So now the major support will be 45K. So that's totally normal to see, a meltdown to going back up. To then go 86 and 110. Okay, that's like a graphical pattern. That's what I'm looking for. But I never told you guys that we didn't have more upside. As you guys see, it's breaking all-time highs and breaking all-time high because the cryptocurrency is really delayed comparing with SP 500. I highlighted this to you guys a lot. The Krypton, the laser eye guys have been telling me, no, we will not break the all-time highs before halving. And I told you guys, yes, we will. I don't know what will going to happen after halving. But I told you, everybody, we will break the all-time high before halving. Because, according to their analysis, this is never happened before. Right? This is never happened before. So you guys need to understand, we are very close for the end of this 100 years bull market cycle. When this finish, I really don't know. But the cycles, the movements are being very strong from the upside and also from the downside, and those movements have been really fast, doing really fast movements, up and also down, up and also down. As you can see, like all-time high again, 72K. Okay, 72K. One of my Fibonacci bring, SP500 at 73K, right? A intraday projection. And so far it's doing what we expected. Okay. But I really want to highlight you guys. Let me show some assets that you can, compare with current cryptocurrency movement and also market movement. Fab is new. Look Boeing. Dijon, right? Dow Jones Industrial. Boeing is clear, in a downtrend. I bought Boeing and I closed Boeing, and I bought bottom, and I sold bounce, and I left Boeing. I am seeing Boeing, trying to backtest some support. We have, important support at 183.30. If you break down 183.30, the next support that's supposed to be 2023 bottom around 176.25. If you break down 2023 bottom, things want to get really wide. The support that I have below 176.25 is 2009 bottom at 136.49, 2008 pivot worst case scenario at $87. Then below the 2008 I have another pivot over here, that's 2001 at 64,000, and the maximum downside target $29. So those are the major supports that we have in Boeing. So if everything is gonna all right, we supposed we never see Boeing, like this. Fab, you have the case regarding the door. I understand that, but you have a war. Boeing is aerospace and defense. They build jets. They build, defense. They have been they build, a lot of stuff. We have a big war, right? So they sell defense to the entire world. And of course, the US government, in my point of view, will never allow companies, migrate from Boeing to Airbus, because the Airbus is a European company. You guys think the US government really want, to, how can I say, bring, Boeing down to give space to Airbus grow, and consequently, a lot of jobs supposed to be lost in the United States? I don't think so. So just, keep in mind, those crazy movements, especially in cryptocurrency nowadays, and in the market, and the Dow Jones Industrial. Like Boeing, like Disney, that came from 212 up to 75, 78 when I told you guys to buy, and now going back to 113, right? Another company, financial institution, PayPal. If you guys, want to compare PayPal with crypto movement, it's a good, comparison, because PayPal negotiates Bitcoin, Ethereum, and also PayPal build a stable coin, right? They build a real stable coin because they have enough cash to do that, different than Tether, right? Tether cannot guarantee, to be a stable coin, but PayPal, yes. That's the only cryptocurrency that you guys supposed to be considered as a stable coin. That's a PayPal coin. But look, PayPal. That's a, I, I, I like to call this as a tulipa movement, right? This is a really tulipa movement. So we have a support at 57.44. Break down, the next support is 53.67. Break down 50, 42, and 30. Worst case scenario is 30. This is the all-time low. But look, people, makes sense to you guys? That's a financial institution. That's a financial institution. So if you compare PayPal, for example, with BAC, Bank of America, look Bank of America. Bank of America is almost, let's compare with the all-time high, is 34% lower from the all-time high. Okay? 34% lower comparing now the current price with the all-time high. Bank of America is building, head and shoulder, where the major support is supposed to be $18, right? $18. We're still in trend. But if you compare to PayPal, 35% lower with the all-time high, is also a financial institution. But PayPal is exactly 80% lower. 80% lower. Is a financial institution as well. So, you guys think that everything's running well? No, right? Exactly, no. So why BAC, Bank of America, is not like 80% from the all-time low? Because if those big banks, Bank of America, JP Morgan, and Wells Fargo fail now, the entire world economy will crash. Bank of America, JP Morgan, and Wells Fargo cannot crash nowadays. I have been telling you guys the HQLA versus inalienability that those big banks has in their balance sheet, that the spread is almost zero. Why you guys have been seeing like a melt up as crazy? Because those guys has a lot of his assets in collateral. Remember the regional banks that had cryptocurrency as a collateral? And you saw what's happening with Silicon and now New York Bank, New York Commercial Bank. All the regional banks have been failing. It's different than 2008. All the Lehman Brothers failed, everything failed. Now, Central Bank, U.S. Central Bank, Federal Reserve, and Janet Yellen through the Treasury, they have been injecting liquidity in the systems to not allow big banks fail. Right? Every time that a regional bank fail, you guys see, the market's going to all-time highs. That's insane. Yes, that's insane. But the market is liquidity. They have injected liquidity as a crazy. They are not trying to fight inflation. No. Remember, the FONC meeting that I sent to you guys? I don't know if I saved it. The PDF. Yeah, I don't remember where I said that. Let me see if over here. that, you know, I put out the highlighted. If you guys read carefully, you know, and check, you know, all my highlights, they are not reading tests to cut liquidity. You know, I highlight a lot of things. Oh, no sign of credit crunch that every single person have been calling. You know, it's not like a quantitative tightening, because now banks have been depositing their compulsory in the Federal Reserve, so we have a plenty of liquidity, right? So, and also the reverse repo that I explained over here, you know, the reverse repo just starts when, you know, offer and demand is not in balance, and consequently they start to do reverse repo. Now it's going back to the Treasury Department through the actions that we have been seeing. So we don't need a reverse repo. So because, you know, the U.S. Treasury Department have been injecting liquidity, is replacing the reverse repo, and consequently, you know, increases the U.S. debt. So we still have liquidity. They are not fighting. They are not removing liquidity from the system. The crash that everybody's, you know, is talking about, they have been postponing up to when, nobody knows. Nobody knows. But, you know, I want to highlight, you know, some assets. PayPal is a good example. Bank of America is a good example. Boeing is another good example. Okay, so we still in a bull market. Anyway, I'm done by now. So you guys already review all the levels. You guys already saw the difference between the volatility skew curve left on Friday and the current volatility skew in the pre-market. So in the pre-market as well, here, let me put the book. You know, a lot of, you know, lower deltas have been printing. So suggestions that we will not break up 4,117, because that's the break-even of those orders. Let me put bigger, so it's highlighted over here. You know, let's refresh my screen. So start at 704 those orders. So that's also matching what I told you guys before about 4,110. So looks like that the market will not break up 4,110. Okay, and 4,009, 4,095, we need to see buyers jumping in. So if you see buyers jumping in, bring the market back 4,000 up to 4,110, below 4,117, of course below also 4,120. That at the beginning of this presentation I told you guys that's supposed to be the rejection area instead of 4,125. We still open to see a squeeze up to 5,200, 215, up to 5,250. So if you see buyers jumping at 4,009, 4,095, bringing market up to 4,110, the maximum pen of today, yes, it is possible to see a squeeze up to the target that I'm looking for. But if you not see buyers, you know, jumping at 5,009, 5,095, market supposed to be start a downtrend up to 4,778, up to 4,800, and then, you know, another melt up to break all-time highs. But today levels 5,009, 5,095 support, rejection area 5,117 for 5,120. I'm looking for market to close at least at 4,110. Okay, guys, take care.